Welcome back, fellow investors and fast food enthusiasts. Today, we're sinking our teeth into the Wendy's company, ticker symbol WEN. So grab your fries and let's dig in. Alright, let's start with a big old bite of the price-to-earnings ratio, or P ratio. Now, the Wendy's company's PR trailing 12 months is 19.91, which might sound like a mouthful, but wait, there's more. Over the last 5 years, its average PR has been 30.02. That's like comparing a regular burger to a deluxe one. But hold on to your pickles, because we're not done yet. Looking ahead, the PRFWD sits at a tasty 17.34, indicating a potentially delicious deal for future investors. Now let's sprinkle on some flavor with the price-to-earnings growth ratio, or PG. At 1.84, it's like finding the perfect balance of ketchup and mustard on your burger, not too much, not too little. Remember that a value around 1 is when a stock can be considered undervalued. But what about insider ownership? Well, we've got a generous 8.84% here, suggesting that the folks behind the scenes are just as invested in Wendy's success as we are in finishing this burger. Now, let's talk about returns, not just the kind you get from a drive-thru, but the return on equity, return on assets, and return on invested capital. With ROE at a mouth-watering 52.72%, ROA at 3.54%, and ROIC at 8.53%, Wendy's is serving up some seriously savory numbers. But wait, there's more on the menu. How about some delicious earnings per share, or EPS? Currently sitting at a satisfying 97 cents, with a side of EPS growth expected at a tantalizing 10.81% over the next 5 years. And let's not forget the evolution of earnings per share over the last 9 years, a positively scrumptious compound annual growth rate of 12.35%. Talk about a recipe for success. Now, onto the free cash flow per share. It's been a feast for the senses with a compound annual growth rate of 30.96% over the last decade. That's like upgrading from a value meal to the whole combo deal. But folks, let's not ignore the dividend yield, a hearty 5.36% with a side of 18.07% dividend growth over the last 10 years. Though, keep an eye out for a potential shakeup as Wendy's approaches a near 100% free cash flow payout ratio. Now, what's the secret sauce behind these numbers? Well, Wendy's boasts an operating margin of 17.32% and a profit margin of 9.37%, serving up profitability hotter than a fresh-off-the-grill burger. But not everything's been smooth sailing. Over the last 5 years, Wendy's revenue and earnings have been as flat as a pancake. That's right, flatter than a squished burger bun. But fear not, investors, because we see potential for a turnaround in the works. This situation has translated to its market price, obtaining a lower total return than VO during the last 5 years. Now, let's address the debt situation. With a debt-to-equity ratio of 13.36 and a long-term debt-to-equity ratio of 13.04, Wendy's maintains its financial health at the limit, and if the rate reduction does not occur quickly and is prolonged over time, it could find itself in serious trouble. And what about recent performance? Well, Wendy's has faced some challenges, with an average price return of minus 12.86% over the last 52 weeks. But don't count it out just yet. Analysts predict a tasty upside of 9.3% in the next 12 months to $21.04 per share. And for me, the fair value estimate of $20.35, it looks like Wendy's might just be the value meal of the stock market, offering a potential undervaluation with a side of upside potential. And there you have it, folks. The Wendy's company, serving up a delectable blend of financial fundamentals and potential. So, if you're craving a bull market, Wendy's might just have what you're looking for. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing.